Good morning, SMF MMTs. We have the Japan deal working out. NASDAQ futures are gapping down 67.8. Dow futures were down 272 points. There's a lot of turmoil. We are in a triple witch. One of two things are going to happen on the opening bell. One is it's all about sell and ask questions later. There's going to be all kinds of different instruments. It's a triple witch. You got index options. You've got stock options, stock futures, index futures. You have it all. And it's all going to be happening here and now. One of the things that we'll always focus on is that there's great opportunities that's always in the leadership stocks, but not until the selling is out of the way. And this morning, because of the nuclear reactors and toxicity hitting levels, and let's just hope that the poor innocent people that are good people are not going to become victim to it. So basically, on that left elbow gap down, we're going to be looking for that knife hook, and where that money either has one thing. There's two different kinds of money. Institutional traders sell and ask questions later, or they wait for a bounce and they would be selling into strength. That's how these work. The Netflix, for the people that are scared to trade it, I'm sorry, should be short up. It will fall and it will go down with the broader market. Period. CMG, same thing. Closed at 255 yesterday. They've worked it in the volatility band. Stock needs to get down to around $160 level. Priceline.com and all of those that are overbloated stocks will be susceptible and will go down. All senior traders will develop short positions. Period. The new people, put your seat belts on and watch the brain. And this is a great time for you to be in your apprenticeship for one reason. Because you get a key driver event that you get to learn around that you would have never learned, because I couldn't teach you it until I could always tell you how we did it. And we did them last time in 2008. In the very same type of markets, and we're opening the bell right now. We are opening the bell right now. We are opening the bell right now, and we're going to see exactly how the U.S. exchanges put the curves in. Here's a weekly chart right here and right now. Some things haven't totally opened yet. I've got some options that look like they haven't totally opened yet. You hear me? So here we are as far as the futures go. Now what's going to happen is you're right when you open up, and I'm going to videotape it, you were only down a few points. Now you're down 150 points in less than a tick. And this is how they are. NASDAQ down 70. NASDAQ comp down 78. NASDAQ 100. Haircut, haircut. Burn, burn, burn. Markets were overbought. They need to shake out the buyer so that new opportunities are set up for you. And that's exactly what we're seeing here right now, is that big burn. We're in a 1 minute time zone of the opening bell, and it's being recorded right here, right now. We're going to take a look at where stocks are going to hit the bottom, but when they roll up, and you new people in this room that are in this apprenticeship, when they roll up, they're going to sell. The smart money will sell. So we're going to see just how it works in the first 20 minutes of the tape. And it is a triple witch. And the markets haven't seen this kind of gap down since 2008. We had lots of them every day. They were like this. So it's nothing new to us. Okay? And we've had some buyers that came right in and hit some certain stocks. This is a Google 560 call that got down here to $21. And Google is making a burn off of the bottom. But once it puts its high in, Tina, roll over Beethoven. So there will be some key leadership where they try to buy into some of these things. They always do. But they're going to roll over Beethoven. Roll over Beethoven. $3 down off of the opening bell. 239 points down, 1175. NASDAQ comp, S&P is coming down to that 1269 and a quarter handle. And we have all of our yearly formulas, and this is how the opening bell is starting. And right now, we are only 2 minutes into the tape. Roll it up. Money comes in and sells them back down. Say roll up, roll over, Beethoven. Okay, good. Here we are. Dow Jones is down 289. We're 7 minutes into the open. NASDAQ 100 down 68. NASDAQ comp down 77. S&P is getting a haircut. Ha ha. S&P 100 big tech getting a haircut. That's going to teach irrational, exuberant people not to be irrational, exuberant. And the SMF, MMT, the good thing about them is that they get a chance to buy when the wreckage and the seller has been taken out of the market, because that's where the big money is going to be made. And not only that, that's what we're going to be watching. And we're down 287 points. We're going to watch intraday. Does the U.S. markets put those curves in? And that within the Triple Witch program this week is that people finally are going to say, oh boy, I can't believe it. Boy, oh boy, we're going to see if that fear factor comes into play. As we have clearly said about the VIX, volatility is pricing in that Japan fear, as it is. And the thing about it is that the market and the bull and everyone alike was very complacent. We also have an FOMC meeting. And if I get up here to a buy signal, this is a fear factor. And it's working its way up, and it's worked its way up above that 21 handle that we have talked about for several months here. And that what happens is when they break higher, last year it broke right up to 40 in one of these corrections that we had. But once the correction is over, that's where the buying opportunity will come in. This thing is in a weekly breakout, and if it gets above that green line on a 200 week and it gets a weekly buy signal, that fear and that belief and that S&P 500 right here and right now, that's that index that was up there where we said people would sell between 1340 and 1348, and that institutional people would get off. The live videos are on the homepage. Go look at them and see, and scratch your head and see what you got to say. Or if you do come back to stockmarketfunding.com and you just looked at it and brushed it off, well, this is what you get for brushing it off. And this thing here, when it breaks higher, it breaks higher. The thing that's related to the NASDAQ comp is this fear indicator right here. And I'm going to put in the VXN. As soon as I get it, I'm going to put it over here. And this is the VXN. It's in the same pattern. This is related to that NASDAQ 100. Back in 2010, when we had a good correction, we went right up to 50 and came all the way back down. Over here, when we had other corrections, look at those runs. And you have an FOMC meeting today. You're about to get into a weekly buy signal on this fear indicator. Because you are. And the thing about it is that we're going to measure the fear as it prices in the Japanese problem and the everything else that goes along with it. I can tell you, though, that once this thing puts in a weekly buy signal, it's got a lot of room to go higher. That means that the indexes have got a lot of room to go lower. They lag a little bit, but we're going to be watching the fear indicators, and we're getting bounces off of the bottom. We've already had the attempted bounces right here, and we're all 11 minutes into the opening bell, and I'm going to conclude this tape, and then we're going to go to work. And as I said, when they roll up, big money's got a chance to sell, because they do. And the thing about it is, as we have said to our apprenticeship students and everyone alike, from institutional trader on down to the very lowest trader, is that this is building a base. And we've seen that building that base over here. We've seen it come up, but we've seen that once it got above 21 here, that there's a lot of room to go higher. And it took an event to trigger the move. And now that that emotional event has been created, we're going to monitor this on a daily level and a weekly level. and in the SMF market maker platform to see exactly how much further we're going to go. If they get into a weekly buy signal, hey, these indexes are still overbought. They need to come down to create buying opportunities. Period. The Apple trade, for you Apple lovers out there, once again, great company, probably the best one, but guess what? You must be punished for your irrational exuberance. And you must go down much lower and get washed out of the name so that the SMF MMTs can buy it and bake in the sun at the low wholesale levels where the bull was way up there at the highs at 360 and whatnot. And this thing needs to burn so that, once again, we can take advantage of the levels. And here is the selling coming back in. Sell and ask questions later. Sell and ask questions later. And here it all is right here for you. And it'll be a day for you to remember. MMTs, you're going to get great opportunities at much lower levels than Apple, and you're going to make a squat load of money in the April earnings. When everyone gets washed out of the name and all the bulls get hacked out, then we'll be moving in.